Very good evening to all of you, and welcome to Stock Durbar by Team Williamul India. Okay, so a clear disclaimer, guys, that whatever we discuss today, the index stocks जो भी हम discuss करेंगे, it's not for the investment advice. Any discussion, it's not for investment advice. It's just for the knowledge sharing purpose. So do take note of that. Okay, so as always, let's begin with Nifty 50 setup. Okay, so over here, if you see, the red line is the 50-day moving average, that is the 50 DMA. The green one over here at the top is the 21 DMA. So these are two of the very important line in the current market scenario. So we have already breached 21, right? So we are already below that level. And now the most important one is the 50 DMA level, which today was at 19,290. So I think broadly, if someone of you who are regularly joining the pre-bell, which is at 8:45 every morning we come live. So there we discuss कि जो ये 200 to 300 वाला zone है, that is very, very crucial for the market. I think if we go below this zone, you might see some more correction. And जब निफ्टी ज्यादा करेक्शन में जाएगा, there might be a chances that the broader market, जो कैश के स्टॉक्स है, which are outperforming and doing really good, वहां पे भी एक थोड़ा प्रेशर बन सकता है. But till the time I think Nifty is holding this 50 DMA, अभी you can broadly say this 250 to 300 zone. If we are not closing below this, then there is no major signs of negativity. But once we close below this, yes, there might be some pressure in the market increasing. Okay, now one more important thing I want to discuss is about the distribution day, right? So the distribution day, for someone who doesn't know, distribution day is when Nifty is down more than 0.2%, okay, on a volume which is higher than the previous session. In this situation, you call it as a distribution day. High volume on the fall is more than 2%, and volume higher than the previous session. So current distribution day count is at 5, and this is a relatively higher. So distribution day count every 25 day के period में होता है. Like this, let's say this is the 25 session का period होता है, उसमें distribution day का count रहता है. So अभी अगर हम last 25 sessions की बात करें, then our count is at 5, which is relatively high. Generally 2-3 से हम लोग comfortable होते हैं. 4 is also okay, but I think 5 is something what you can say little on the higher side. And after every 25 trading sessions, the distribution day count expires, right? जैसा कि आज ही हुआ. This is the recent example. जो आज कौन सा है, 17th August, right? So before 25 sessions, we had got a distribution day, and that has expired today. So ideally आज count हो गया हमारा 4 out of 4 की जगह 4 हो जाएगा. But what happened today is, like today Nifty follows more than 0.2%, and volume was also higher than yesterday's session. So today we got the 5th distribution day, so the count remained the same. Otherwise आज 6 हो जाता है. So 6 distribution day generally थोड़ा high होता है, and that clearly indicates that the market में pressure बढ़ता जा रहा है. But now it's still 5. So most crucial on the technical front is the 250-300 zone. उसके नीचे close नहीं होना है अपने को. On the flip side, if we move above the 21 DMA, which is somewhere around 600. So once we move above that 600-650 level, right, then we can see yes, 600-650 level के ऊपर जाएंगे. Then we might see again Nifty moving towards the new high. There are chances we might move to 20,000, above 20,000 as well. So broadly, I think levels are very clear if someone wants to note that. 600 to 650 on the higher side, and 250 to 300 wala on the lower side. And one thing, the distribution day count is little higher pi, but the positive cheez ye hai ki broader market is doing well. So if you look at the cash stocks, they are in a very good momentum. जो breakout हो रहा है वो successful हो रहा है. Lot of new sectors are coming into momentum. तो defense वाला तो momentum में है ही. The shipping stocks are in a very good momentum. Paper अभी धीरे धीरे ऊपर आ रहा है. ठीक है. बाकी infra related stocks है, construction related stocks है, that are already holding at a very good level. So sector wise there's no major issue. इवन PSU बैंक्स, अभी आप देखो PSU बैंक्स में क्या जबरदस्त मोमेंटम मार रहा है. Most of the small PSU banks are in a very good momentum. So overall it's a good shape for the broader market, but हाँ निफ्टी लेवल पे ये दो तीन चीजें थोड़ा ध्यान पे रखना पड़ेगा. Some comments that not able to hear, please reconnect. I hope that's limited for 1-2 person only. Broader audience is able to hear the noise.
You're audible, Rushit.
Okay, yeah, thanks, Vakar. Okay, so this was about the Nifty. Now let's go to sectorial front. So Nifty Bank, it has breached its key moving averages. So this is what I was telling about Nifty. कि जब भी 50 DMA के around, it tried to defend, right? Almost देखो 7-8 session तक it tried to defend its 50 DMA. But once the 50 DMA was breached, we saw some 3 back-to-back negative sessions, right? And that's what generally happens when 50 DMA gets breached. So this is what I was trying to discuss in Nifty, that there are possibilities. ऐसा होगा ऐसा कुछ नहीं है, ऐसा 100% पता होता तो क्या ही चाहिए. But broadly, there are always a higher chances of market slipping 2-3% further when the key moving averages are breached. So now the focus over here in Bank Nifty should be it reclaims its 50 DMA on a very decent volume. So here things are mixed. So on one front, you will see some of the PSU, small PSU banks doing really well, making new high every day. 5-7% ऊपर चला जाता है कभी भी. ठीक है. On the flip side, the bigger private banks are putting pressure. So जो बड़े banks है वहाँ से थोड़ा pressure बनता जा रहा है. So this scenario is something similar to IT. So last year हुआ था कि अगर आप TCS Infiwipro देखें तो वहाँ से एक pressure आया जा रहा था. And if you look at the small and mid cap IT names, so there was good strength over there and they were making new highs. And so now let's come to Nifty IT only. Over here also, it is moving a bit sideways now. Gradually thoda upar ja raha hai, but broadly, if you see last 1 year, it is stuck in a range. So ये 32,000 के generally ऊपर नहीं जाता और 26,000 के नीचे नहीं जाता. So it is forming a base over here. So let's see once it breaks out and if we see some momentum in the leading stocks like the top 4-5 IT stocks, then it will be really good for the index as well. But थोड़ा जो US economy नीचे रहने की वजह से जो प्रेशर है, स्पेशली BFSI सेक्टर, वहां पे बैंकिंग फाइनेंस सेक्टर में थोड़ा डाउनग्रेड हुआ है इन द वेस्ट. सो ड्यू टू दैट डाउनग्रेड्स ऑफ द बैंकिंग सेक्टर इन द वेस्ट, which is the biggest client of Indian IT sector, there will be some pressure on this stock. It's not that their order book नहीं मिल रहा है, order book है इनके पास, the order book is expanding, it is at a very healthy level. बट द प्रॉब्लम इज एग्जीक्यूशन. अभी अगर एक पेज अगर आपका प्रोजेक्ट का हो गया तो वो बैंक वाला बोलेगा भाई अभी रुक जाओ 6 महीने, उसके बाद करेंगे, थोड़ा पैसा बन जाने दो, लेट द मनी बी देयर, लेट अस प्रिपेयर फॉर सम अनसर्टेनिटीज, उसके बाद ये प्रोजेक्ट करेंगे. सो द प्रॉब्लम इज वो डिले होते जा रहे हैं आईटी के प्रोजेक्ट्स, स्पेशली जो बिग टिकट साइज है. अभी आप TCS, इन्फो, विप्रो, ये सब बड़े टिकट साइज के ऑर्डर्स लेते हैं. And there is this pressure. वो छोटी टिकट साइज के ऑर्डर है, लाइक द स्मॉलर IT कंपनीज गेट्स, वहां पे इतना प्रॉब्लम नहीं है, वो ऑर्डर मिला, काम हुआ, पैसा मिल गया. सो दैट साइकिल इज एंडिंग फास्ट, राइट? And that's the reason their results are robust, their margins are expanding, the revenue growth is good. But the problem is there in some of the larger IT firms. If we discuss auto, So Nifty Auto is trying to find support near its 50 DMA. So the situation is similar to Nifty. Nifty Auto or Nifty ka chart almost it's looking similar. So there is a huge gain for 3-4 months back to back, and then it tried to get support near 21 DMA multiple times, but abhi recently fail hua, and now it is trying to find support at its 50 DMA. So this sector has been very important in the recent 1-2 year up move in the Nifty. So all the leading sectors, leading stocks, they need to be tracked. ये बहुत important है. देखो सिर्फ distribution track करना, Nifty कितना weak हो रहा है. If you are just tracking few things, that will not cover the entire market. But your focus should be on the L. जो CAN-SLIM में L है ना, CAN, SLIM में. So L is for the leaders and laggards, and your focus should be on L. So those sectors, those stocks that are leading the market, they should hold the gains. अगर वो gains hold कर रहे हैं, वो ऊपर जा रहे हैं, तो वो market को भी ऊपर लेके जाएंगे. But if the leading stocks are giving up the gains, if leading stocks are not able to perform, then there will be always some issue at the market level, and that's why auto is very important from that perspective also. Even the banks were there. So auto, the sales are good, the demand is good, not a major issue. I think abhi supply chain or semiconductor issue bhi ease out ho gaya hai. So that is not the problem. Nifty metal, if you see, this one is a bit under pressure. Now it's again ये अभी जो recent के fall है, the recent fall in the Nifty for last couple of days. So the gap down वो होता था, फिर थोड़ा नीचे जाता था. The main culprit was the metal stocks. For last 2-3 sessions, they are continuously under pressure. This is mainly due to the jitters from the China. So the economic stability, or you can say the economic growth prospect rather than the stability, is not very strong at this point of time in China. And I think the metal market is on a lot of front driven by the Chinese economy. So wahan pe agar things, if the things are robust over there, if their demand is high, then ultimately the price goes higher, the demand goes higher in the global market, and the metal stocks tend to perform well. But on the flip side, here there is some issue due to the Chinese pressure. So let's take FMCG and then we'll go to your queries. So here it's moving a bit lower. It has also breached its 50 DMA last week, and now it is trying to reclaim that 21 and 50 DMA level. So यहाँ पे भी अच्छा rally हुआ था. So let's see if this can retake the level or not. Overall, the urban demand again remains robust. Rural demand improving है. ठीक है. Margins में अभी थोड़ा stability आ गया है. But I think the raw material prices are fluctuating again. And the commodities, the vegetables and everything, फिर से वो एक fluctuating वाले mode में चला गया है. So let's see how the things ease out over the next month or so, and then we'll get a better idea about these FMCG stocks. But overall, the demand volume growth, price-led volume growth, to be specific, is really good. Okay, so now we'll start with your queries. But please do not keep repeating it 5, 10 times, 2 times, 3 times. Just keep it once. We will try to answer as many as possible. And it's not that we go for selective only. जो भी वो आता है वो we try to take it up mostly. So if we miss something, please do not get hurt. ऐसा हमने कोई intentionally चीजें miss नहीं की है. I just want to make sure that, and please don't repeat queries too much, and no direct messages also to any one of us. So we have in the room my colleague Vakar and Rajshekhar. So we three will try to answer turn by turn as many queries as possible.
Thanks, hi everyone. My name is Rajshekhar. I'll be taking few queries now. I'll start with Dixon first. Mr. Manjunath asked about Dixon Technologies. As you can see here, stock has very good set of ratings. In the top left side, if you see EPS of 97 and price strength of 80 and buyer demand of A+. Both technicals and fundamentals are looking very good for the stock. Ratings wise, it is very strong. But if you look at on the chart is also, it is holding it's most of its key moving averages. It is trading above its key moving averages, but the only thing is the stock has not formed any base pattern recently. Even though it has advanced sharply from the level of 3,000 in May. Currently, it is trading at 4,700. So it's almost more than 50% gain in less than 2 to 3 months. So it's a very good advancement the stock has made, but as the stock has not made any base pattern, this stock we didn't keep under radar. But if you're looking for a position at this current moment, still the stock is looks like an extended one from the moving averages. And let's wait for the stock to consolidate here for a bit, around 3 to 4 weeks of consolidation, and then if the breakout happens on good volume, then you can look for a fresh entry. By the time if the Nifty also holds up, that is also crucial. Nifty should hold up and it should not breach key moving averages. Then only we'll be taking on ideations. However, on the downside, you can keep stop loss related around. Let's see where the 21 DMA is, Mr. Abhishek. Yes, 21 and 50 DMA are very close, around 6 to 7% from the current market price. So if those levels are breached, then you can look for an exit. Uh, Okay, moving on to the next query. Already lots of queries have come in. I'll start with what is it? Metro brand and ITC. I'll take. Metro brand, you can see the stock. You can see the stock has not so good set of ratings. The EPS is slightly on the lower side, 56. That is majorly because the stock is not able to generate growth. If for the last quarter, June quarter, you can see the numbers have the growth rate has come down from 30%. The sales growth rate has come down to 12%, and also on the EPS front, previously the stock used to grow at 12 to 20% range, but now the growth rate was 3%. So majorly that is the reason because of declining growth rate, the EPS also come down. And technicals are also fair enough, but not strong enough for us to add. You can see the stock has moved sideways with a slight advancement in the meantime for the last 3 to 4 months. The stock has in uptrend momentum, but the momentum is not very strong enough. It is very volatile while the stock is moving higher. And RS rating is also at 68. That is in not a strong enough rating, but it is considered fair enough. On the ABD rating wise, it is looking good. Accumulation is stronger because if you look at volume bars, most of the blue bars are above average volumes, whereas the red bars are below average. Another key parameter which we look is the number of funds. You can see that parameter has come down 4% in the last quarter. So indicating a declining institutional sponsorship is not a good sign according to our O'Neill's perspective. Next, I'll take ITC. ITC has done very good for the last one and a half year. You can see the long-term trajectory has been very good. It is holding up its 50 DMA as well. The red line here, very good, very positive sign. Recently, you can see that 50 DMA was breached. This is majorly because of some kind of profit booking happening, not a major Also, the Nifty has also come under pressure. In the meantime, you can see after peaking around 500 rupees per share, the stock has come under pressure and it is currently around 10 to 12% off highs. EPS rating remains intact. That is because not so much change in the quarterly earnings, but the RS rating has come down. RS line has also declined. That is majorly because the stock has breached its moving averages and uh, the stock's momentum is also on the lower side. But other parameters are looking very good. Number of funds wise, even though the quantum of funds are very high, still the stock is able to attract new funds, which is a very positive sign. Return on equity is also very good as it is highlighted here. You can see it is at 28, very good number. Fundamentally, there is no doubt about the company's operations and the operational capability and the growth they are uh, able to meet the expectations. The company has been doing very good on for the last decade or so, which is a very positive sign. So, but the technicals are not pointing for us to add at the current moment. We are expecting the stock to consolidate here for a bit, and then we can take a call depending on the stock's movement and also on the market structure.
Yeah, Raj, Vakarya, I'll take in some queries now.
Sure, okay.
Just a second, just scanning through the queries. Rushit, can you give me MFSL? Yeah, Max Financials. Rushit, is a chart recognition on? Just check for a second. No, it's not. Yeah. Okay. I thought so. Yeah, no issues. So the stock didn't deliver, I mean, a very decent or good set of result in the last quarter. And similarly, you can see even the fund holding for the stock has been declining. And the EPS strength is not that good at 59. Your price strength is also fair. I mean, the stock did try to break out. And I mean, it's currently probably trading in its ideal buy range. But what's I mean scary is one that there was no good accumulation on the right hand side of the base. Plus, if you look at the results and plus the fund holding declining, if the fund holding declines for one more quarter, then it's probably a red flag sign and it's not good. But I mean, someone who's probably bought this stock already at the breakout can keep the initial 7 to 8% at the stop loss, or even your 21 DMA going forward. I mean, considering there are other better breakouts that are happening, this one probably can be avoided. The other is Torrent Power. So the stock is still forming a base at this moment, and on the right hand side of the base, you are yet to still see some good accumulation. I mean, no big blue bars, volume bars are happening, but the stock is still 16% to the pivot. What Rushit is still pointing out. So the stock has some leg run up to do, but again, one of the key parameters, that is the institutional effect, that is stable or declining, so which is not a good sign. And even the result for the last quarter wasn't that great. So I mean, going forward, maybe 16% is still a lot of legs for the stock to do. And given that point in time, if you see good accumulation happening and the stock breaking out on above average volume, maybe you can consider. But there are certain parameters such as the EPS and the fund holding, which at this moment is, I mean, probably keeping you away from this stock. But yeah, I mean, the right hand side of the base is still very big, 16%. So never know, I mean, what kind of accumulation the stock can show in the coming time. The other KPI green. So the stock has been on a roll. I mean, for the last 6 to 7 months, it has, I mean, since the last breakout, it has doubled. And what Rushit is pointing out, that is ideally right. I mean, the stock broke out from a 4C cup base, that is a higher stage base, but the stock is not um stopping any movement. I mean, even the fund holding, considering the market cap of the stock to be very small, the fund holding is also increasing. What's not so good about the stock is you can see the last quarter result and the last couple of quarter results has not been that great for the stock. So maybe that is the thing. The stock is probably correcting or accumulating around your 21 and the 50 DMA. Twice it found support near the 50 DMA, and it's currently above the 21 and the 50 DMA. But I mean, ideally, according to our canceling rules, we would not, considering all parameters are good, but the stage count is so high that, and even the story, I mean, the renewable energy story has been very good. I mean, the wind energy, the solar energy has been very good. So, I mean, you just cannot enter it. I mean, maybe if the stage counts get reset in future, I mean, if the stock reaches some, if the stage counts get reset, and after that, I mean, it can be a really good stock to watch out for, because the higher the stage count, the higher the chances of failure. Someone who's already holding the stock, maybe from an earlier stage basis, maybe like a 2 or a 3, maybe, I mean, it was consolidating in 4 for a very long point of time. And even at someone who would have bought it at that stage as well can keep the 50 DMA as their trailing stop loss. Why? Because couple of times it found support near the 50 DMA. If it again breaches the 50 DMA, it can be safe to exit the stock if one is holding the stock.
Yeah, thanks, Wakar. So there are multiple questions about the sector in momentum, that is the paper stocks. I think last 2-3 sessions have been excellent, especially the last one for all the paper stocks. So that story is coming into the picture. See, 2-3 things over here. Firstly, so last year was very challenging for all the paper companies, right? So pulp ke prices itne high the, and then there was the supply chain disruption. Okay, so they were not getting enough margins, and the demand was not that robust. I think abhi last year धीरे-धीरे pre-COVID level को वो लोग cross कर रहे हैं सारे revenues. But now I think the things are a bit changing. So now the demand is very robust, and all the, if you look at the office papers, जो schools के लिए papers printing, the new education policy, right? The new education policy की वजह से काफी सारा paper printing होना है, नई books बननी है. Then the other side of the story is about the India's increasing per capita income, right? So that is also one thing. Then the growth in e-commerce. So we last kuch time mein, few years we saw that there is a huge upsurge in the e-commerce industry, and but due to the problems in the paper industry of the raw material prices and margins not able to, so इसमें performance नहीं आया. But I think now again, if you see that these demand remains robust, right? So now if the margins are good, the raw material supply is easy, supply chain relax हो गया है, even the tissue is a bigger market. So वहां से भी एक अच्छी खासी डिमांड है. मोस्टली सारी टिश्यूज वाली कंपनी 100% कैपेसिटी यूटिलाइजेशन पे चल रही है. एंड बैकवर्ड इंटीग्रेटेड, जो भी फुल्ली बैकवर्ड इंटीग्रेटेड प्लांट्स है, जैसे कि जेके पेपर है वन ऑफ देम, राइट, ओरिएंट है, तो these are doing quite really well. And so the demand is good, the sector is in momentum, and if you can see last 2-3 days जो high volume पे इसमें growth, like price ऊपर गया है, that is really really good. but still I think you need some time over here. In particular stock wise jana hai abhi isme, like JK paper is forming a base and it is 18% to pivot. So let some buying comes. ऐसा अगर और buying आता है, it breaks out from the base, then that can be a good stock to watch out for. And if we look at the other paper also as asked, okay, there were other 2-3 paper stocks also. That question was there. Let me check. Okay, West Coast का भी था. So broadly, I'm not discussing all the stocks, but yes, here also the stock is forming a stage 1 base, and this is just 12% to pivot. जो ये within the base इसका जो एक resistance बन रहा था, right, somewhere around this 590, 600, the stock is around that level. So once it moves from here, it will be a within a base movement in a breakout type, and then the ultimate goal is to move about the 664 level, and from there you can see a very good uptrend possibly in the stock. The earnings have been good. Last quarter में थोड़ा revenue side इतना growth नहीं मिला, but if the West Coast paper is really good story, ROE of 29%, fund holding stable to increasing. So these stocks, these are the themes and the stocks that needs to be put on your watch list. And yes, one more thing, वो single use plastic ban वगैरह का eco-friendly culture, ये सब भी इनके लिए थोड़ा benefit रहेगा given in the long term. So there's question on Coforge. The stock is in a very good momentum, guys. I think I discussed briefly about that IT thing in my first part only. And the same, I'm not trying to repeat all that again, but yes, the small, medium to small companies have a very good order book, ticket size inka jo chota hai, so they are getting a very good benefit in the market. So fund holding increasing, the results are consistent. If you look at the ROE of 20%, all the things are quite well. So it is extended from the base. तो अभी के लिए कुछ entry point नहीं है. But if you are already holding the stock, then I think 21 and 50 DMA should be used as stop loss. So broadly, if you look over here, it does flirts around 21 DMA. But I think 50 DMA can be a very good support over here. But if it breaches 50 DMA, it's ideal according to O'Neill methodology to book profit, at least some part.
Yeah, Rishit, I'll take queries now. I'll start with Nesco. Nesco, yeah. The stock has recently broken out from its stage 1 flat base. As you can see here, it is highlighted here. In the almost in the end of July, it has broken out. It did find some momentum after breakout, 3 to 4 trading sessions of upward momentum, but later stock came under profit booking, and slight selling pressure has also come into the stock. And in the downtrend, I can see here the stock tested its 21 DMA, and it has found good support at its 21 DMA, which is a green line here, which is a very positive sign. And on the ratings wise, EPS is very strong at 86. That is majorly because if you are looking at the growth rate, the company was able to generate both on EPS and sales front. Very good growth rate, consistent growth rate was there for the last 4 to 5 quarters. Almost 50 to 60% on average growth in sales and EPS, which is a very good sign of a growing company. And return on equity is good enough at 15%. Number of funds increased 7%, but there was a slight decline in the shares held by the funds. That should be taken in a slightly cautious way. But on the price volume action front as well, the price action has deteriorated slightly. This is majorly because of recent sell-off in the stock. the RS line has come down slightly, and RS rating declined to 54. But ABID rating, which indicates accumulation, has stayed good. It is stayed intact. This is showing. This is indicating that on the downtrend days, on the down days, the volume is on the lower side. As you are seeing here on the chart, on the downside, you can see on the volume section, the volume bars are below average. That indicates not so much higher selling pressure. It can be considered as a slight profit booking by the retailers. So on the fresh entry wise, currently it is 3% from its pivot, but it is not idle buy range. It is not trading in the idle buy range. It is not highlighted here. But if you are currently market structure is also as pointed out by Ruchit in the opening remarks, distribution day count has increased to 5. That is because one distribution day expired today. Otherwise, it would have been 86. That is a slightly higher elevated distribution day count. So on the additions front, we are very cautious and we are adding only strong breakouts which have good ratings and also good growth story. On the so it's better to stay right now away from this stock and wait for the market to improve and the stock also to improve its technical ratings. Next is Nelco. From Anil. It's a very small market cap company. The market cap is at 1,800 crores of rupees. As you can see here, it is highlighted. On the growth wise, the company was able to generate good growth in sales and EPS for the last 4 quarters. EPS is also fair enough at 75. RS rating is also fair enough at 65. Only concern is you see the pattern. The stock is suddenly rallying in a couple of sessions at 4 to 5% in a couple of sessions, and then sudden sell-off is there. So according to our methodology, our stop loss will get hit in such a kind of scenario very easily, and average trading range is also higher. So on the risk reward perspective, this kind of stocks will hit stop loss very easily. So it's very difficult to ride on to these kind of stocks. So so that's the reason we have not considered, and there is no proper base formation also in this particular stock. So it's better to avoid these kind of stocks. Let the stock company prove itself to the market, and let number of funds, that is institutional funds, also increase much more, and the pattern wise also, if the stock is generating good set of pattern on a daily chart, then it's very good for us to invest. Otherwise, it's better to stay away from these volatile patterns.
Thanks. Thanks, Raj. I'll take inquiries from you.
Okay.
So, Gland Pharma. So, I mean, the stock has shown some kind of, bottoming out, potentially bottoming out, and it's recovered from 800 levels to maybe 1600, but it doesn't really fit the canceling criteria, majorly because of declining institutional holding, plus the results are also not that good. So the EPS rating for the stock at 53 is bad, and plus even with the improvement in your rating, the RS rating is still standing at 33, which is not a good sign. And going forward, maybe the stock needs to do, improvement on all the fronts. The results have to improve, plus the institutional holding has to improve. and the stock has to form a new base as well. So I mean, when probably each and every box gets ticked at that point in time, it will fit into the canceling criteria. Till that point in time, it's better to avoid. And I mean, someone who went out for bottom fishing, who probably uh, um, went ahead and bought the stock maybe when the stock reclaimed with 50 DMA or 200 DMA, can at this moment, I mean, the extension from 50 DMA is way high. So maybe uh, towards 200 DMA can be kept, or even considering the stock is highly volatile, even a shorter term moving average such as the 10 EMA breach can also be kept for this stock, because major other key moving averages are pretty much, I mean, slightly extended for this stock. The other we can go ahead is um, too many. Canfin Homes, and then M&M Financial Service. Yeah. So the stock has come off highs at the moment. So it, I mean, and if you look at near the highs, there was some good distribution happening near the top, which is not a good sign. If you see, I mean, big red bars going in, and with those big red bars, the stock breached its 21 and the 50 DMA is currently trading below the 50 DMA, which is not a good sign. And going forward, I mean, let the stock form a new base, and even with the new base, with the distribution that has happened, the buyer demand for the stock has weakened. So when the new base gets base gets formed, uh, on the right hand side of the base, there needs to be some good accumulation happening. And with that, if that happens, a new base gets happen and the stock breaks out on above average volume, the fundamentals for the stock and institutional holding is pretty much intact. So I mean, that half of the stock is pretty much covered. The technicals that has deteriorated needs to be come back on track. So once that happens, maybe it can be a stock to be watched out for. M&M Finance, we're discussing the space, so we can go for M&M Financial Services as well. I mean, this similar kind of action you can see around the 21 and the 50 DMA when the stock uh, breached its 2150 DMA on very high volumes. And overall, if you see the ratings on all the fronts, the ratings have been very bad in terms of EPS trend going down, price trend going down, your buyer demand going down. So overall, it's not the stock is in a technical and the canceling front. The stock is not in a good shape. Uh, so the technicals is what is need to get improved. Someone who probably bought the stock at breakout should have ideally exited the stock when the stock breached its 21 DMA and the 50 DMA on above average volume. Considering the stock is still trading below the 50 DMA at the moment, yesterday's lows can be kept as a potential stop loss for exit. If that happens, if the yesterday's lows gets breached, then if someone who's still holding can exit out of the stock.
Thanks, Vakar. We'll take quick couple of queries now. Uno Minda is one. Okay, so it gave a very clean breakout, but it's a stage 4, a bit higher stage breakout. So the chances of failure maybe going ahead might increase. So let's check out on weekly front how it looks. Yeah, you can see broadly since December, or you can say, December 2021, it had been moving a bit sideways with strong resistance around this 500 to 525 zone. I think today it has, 600 to 625 zone, but today it has moved above that level and the closing is quite strong. So in that case, if you consider, I think this is very good one. So if you are holding the stock, then ideally, according to owning, you can hold as of now, but use 50 DM as a strict stop loss, because यहाँ पे देखो काफी सारा support मिल रहा है इसको 50 DM में. So if it fails to hold the 50 DM, I think fourth stage breakout के बाद अगर वो 50 DM में breach करता है तो थोड़ा sharp drop का probability high हो जाता है. So please mark these words. I'm not playing with it, but yeah, probability high. So this is all about probability, and when the base stage count is high and such thing happens, there are chances of a bit sharp fall. Overall, the business is really good. I think this momentum was due to their उनका नया facility start हुआ है, which will produce for EVs, जो parts machines EVs के लिए चाहिए वो बनाएंगे ये लोग. So the growth in electric vehicle, the demand from there coming is very good for Uno Minda, and that's the reason the stock has been moving higher, because it delivered. जो उन्होंने बात किया था कि EV के sector में we will be one of the leading to provide the components, so they are on that track, and that's what market liked about the Uno Minda. Financials भी काफी stable है. Recent results are very good. So no doubt around the earnings as well as the revenue growth capacity of the companies. Look over here quickly. So that's really good. I think fund holdings अभी increase हो सकता है इस quarter में. अगर ऐसे momentum वाले volume, ऐसे momentum में भागा है, so there are high chances that fund holdings might improve in the ongoing quarter. So let's see when the numbers come out. But currently, fourth stage basis, so we won't chase it. So it's like chasing the stock at fourth stage base. But if you're holding, you can use some stop loss. The other query was on RateGain. So this stock has given an excellent momentum during the year. So पिछले कुछ महीनों में from around 260 to 70s, and now it has crossed almost 600 levels. So the result of this company came last week, and I was tracking that, and it was a very, very good number. जो उनका revenue growth है, ठीक है, almost double हुआ on YOY basis, 90% plus growth था. Organic growth was 25%, वहाँ पे 25% growth आया. Even if you look at the margins, so the margin was more than some 16-17% से भी ज़्यादा margin है इसका, and that is much higher compared to YOY. And it beat estimates also. Estimate ऐसा था कि 14-15% इसका margin आएगा, but 17% से भी ज़्यादा margin इसने आया. Plus जो major driver है ना अभी की रैली का, that is the guidance. Okay, so firm is expecting to beat its own previously guided FY24 revenue growth. ठीक है, तो पहले भी उनका हाई था कि 55-58% YOY होगा, बट अभी वो बोल रहे हैं कि उसको हम एक्सीड करेंगे. So डिलीवर भी किया रिजल्ट से, और कमेंट्री भी अच्छा आया. So both the front, it's been very strong. So if someone is holding the stock in the portfolio, then it's really good. I mean, it was a stage 1 breakout, so initial stage breakout है, तो वो भी कोई टेंशन नहीं है. अभी काफी extended है, almost 63% from its 200 DMA, 33% from 50 DMA. So fresh entry बिल्कुल suggested नहीं है. If you are holding the stock, keep holding it. Have a trailing stop loss to protect your profit. अगर ज़्यादा नीचे आता है तो थोड़ा ट्रेन करके profit book कर लो. बाकी fund holdings, this is something very good to see. दोनों front पे, number of shares and number of funds. Results, the earnings growth have been quite good, and the main thing is the estimation is high, even from the management side. So it's a good stock. Wait for some time if you are not holding it. अगर थोड़ा नीचे आता है 50 DMA के आसपास और वहां से rebound होता है, or if it forms a fresh base over here, So ये तो अभी stage 1 ही था. If it forms a stage 2 base somewhere over here, then you can consider adding this tracking this during the base formation and in the watch list when it comes near the pivot.
Thanks, Rashid. I'll take the queries now. I'll start with State Bank, SBI. Stock currently has formed a base pattern of stage 1 cup with base pattern, but you can say it's a failed breakout because after breaking out, the stock came under pressure and it breached its long-term averages as well as 200 DMA as well. So mostly it's a failed breakout. And that is reflected in its technical ratings as well. You can see RS rating has completely deteriorated. It is come to poor category after 33, and buyer demand is also at lowest. That is a very not a positive sign at all. It's mostly a sign of bearishness and to be cautiousness sign. EPS still remains intact. That is because the company reported good set of numbers for the last 3 to 4 quarters, but EPS do not change much, right? It changes only once in a quarter. So we always pay attention and give more weightage to the technical ratings rather than going by the fundamental ratings. If you have waited for the stock to deteriorate on the fundamentals front, uh, then you could have not exited this and you would have still holding it. But on the portfolio wise, you would be bleeding on this particular stock because it has fallen almost 10%, and it also breached its 200 AM as well. So as they say in the market, the technicals are more a leading indicator rather when compared to fundamentals. So one should always give more weightage to the technicals, and the price volume action should be taken very seriously. You can see on the downside when the stock is falling, the volumes are also above average, that indicating some kind of selling pressure among the big investors as well. And that is reflected in the number of funds as well. A slight decline in the number of funds in the last 1 quarter, but that is not a major decline. But still, we are not favoring the stocks which are losing institutional sponsorship. If you are holding the stock, it's better to exit this particular stock. And looking for a fresh entry is not advised at this particular moment. Let the stock improve and let the technicals improve. Let the stock to form another base pattern in the next coming month and see how stock behaves in the market. Until then, it's better to avoid State Bank at the current moment. Yes, Amit, SBI, you can say it is in a selling zone. Next, I'll take up one more bank, that is Bandhan. It has been asked a couple of times. A similar case with the Bandhan as well. If the stock breached its 200 DMI, it is not able to reclaim that particular level. Ratings are also beaten down. EPS 46 price rating is almost at lowest category. Both fundamentals and technicals are not looking good for the stock. On the chart wise also, you can see stocks trading below key moving averages are not considered according to our methodology. We would avoid those kind of stocks at the first moment itself. And if you have this stock, you can we would advise to exit and look for stocks which are doing good in the market, which are breaking out or which are holding key moving averages. And looking fresh entry is not at all advised at this particular moment, as mentioned with SBI as well. And let's wait for the company to improve on the numbers front as well as on the technicals front.
Thanks, Raj. I'll take in a couple of queries now.
Sure, Waka.
Rashid, can you give me Bombay Dang chart? Yeah. Thank you. So, I mean, even with a very poor EPS rating, the stock did break out. and it has broken out successfully. And if we just talk about the technicals, I mean, the stock is showing good accumulation in the last few sessions. So on the technicals, that is a very good sign. The last couple of results for the quarter is not for the company has not been that good. Fund holding for the stock continues to remain intact. Someone who's probably bought the stock on the breakout uh, can continue to hold the stock. Uh, Considering you would have a decent amount of gains, fresh entry into the stock is not advisable. Uh, One can easily trail their stop losses or at least partial book their profit if the stock breaches the 21 DMA. And considering the stock has hit the power to pivot, I mean, full exit, I mean, can be taken, can be avoided as well. But if the stock breaches 21 DMA, at least partial profit booking should be done, if not completely. The next can be taken as Crafts Automation. So if we talk about this stock, I mean, the perfect or near perfect, if we talk from the terms of your all the canceling parameters, EPS strength at 94, very good, price strength, very good, your buyer demand also very good. Fund holding for the stock is improving. Your last 4 to 5 quarter results for the stock have been very good. ROE for the stock has been really superb. After that, if you see, once the stock broke out on above average volume, you can see good accumulation happening on the stock. And a couple of times, 3 times, I mean, the stock found support near the 21 DMA and it has just zoomed from there. So someone who's holding the stock since breakout would be handsomely sitting on profits of at least 32%. And going forward, if considering the growth story of the stock, if someone wants to probably partially book out profit or trail the stop losses, can do that at the 21 DMA and continue to probably hold the remaining part if the stock moves down from the 21 DMA. I mean, always look at price volume action. If the price volume action deteriorates, you can always exit the entire position.
Thanks, Waka. So we are running out of time. I will take 3-4 maximum quick queries and then we close the session. So there's one on IRFC. Okay, this has been in a very, very good momentum after the breakout from the stage 2 cup base. It went almost 41% higher, hits power to pivot. The power to pivot means gaining more than 20% in less than 3 weeks. So this is considered very positive according to O'Neill. So currently it's a bit volatile over here. So if you are holding the stock and if it falls further, you may trim you some of your profit. On the flip side, once it again breaks out from this high, which it made couple of times around 52, 53, and then I think the momentum might continue over here. So the railway story is not in shape, and that's what helping the stock. The government focus on the railway, and the railway infrastructure is helping the stock to move higher. The second one is Emudhra. Okay, so there was some strong momentum today. I'm not sure, and I don't want to convey some wrong message. The reason behind this 16% gain, it's still not clear. Like, we'll do some reading in the evening and we'll check it out. But I'm not sure the reason for the 16% gain, but it was a very good one. So it consolidated around 50 DMA, which is ideal. So यहाँ से breakout होने के बाद it again consolidated around pivot, moved higher, and 50 DMA consolidator के ऊपर गया. So now it is much extended from its pivot, almost 30% from pivot. So fresh buying not suggested. However, those who are already holding the stock can continue to hold it, right? And those who are not, they need to wait for a new base formation, or again it to pull back to 50 DMA and rebound. Fundamentally, थोड़ा अभी last 1-2 quarter में problem है. Otherwise, broadly, the 95 EPS is very good. And even the fund holding has been increasing steadily. So no two ways about that. There's one more on JSW Energy. So yes, it gave a good stage 2 cup with handle base breakout, and it is moving higher. So it has moved higher almost 10% in just 4 to 5 sessions. So it is extended from the buy zone and need to wait. One thing which distracted us to get for this stock is the earnings. Earnings have not been good. Even the revenue growth has been very volatile. So we want some steady earning and revenue growth, which the stock has not given. Technically, it's looking good. The breakout is strong. So if you are holding the stock, then you might use the pivot as a stop loss level, or 8% rule can come handy over here. And if you are not holding the stock, it is extended and should not be added according to O'Neill methodology. Amit, ITC is already discussed in detail by Rajshekar. SSWL, we can try. Okay. So yeah, here also there was a very good momentum. Again, if you see, the volume was high when the stock was moving higher. So this is what we like. Okay, and अभी जब correction हो रहा है तब volume थोड़ा low है. So this is positive. इसमें कुछ इतना problem नहीं है correction में. अदर गुड थिंग इज जब ये यहाँ पे एक डीप आया था एकदम 50 DMA के नजदीक, सो वहां से एक शार्प रिबाउंड होके इट क्लोज नियर इन द डेज हाई, टॉप क्वार्टाइल ऑफ द डेज रेंज में बंद हुआ. सो दैट इज पॉजिटिव. टू कंक्लूड दिस वन, आई थिंक 50 DMA शुड बी यूज्ड एज अ स्टॉप लॉस, बिकॉज ये वाला लेवल भी है एक, ये लो एंड 50 DMA, these two levels are very important to hold. On the flip side, I think when it will move about 21 DMA, it might continue the momentum. So fund holding is very good on both the front. It is increasing. Results abhi itna acha nahi hai, but ROE of 17 is very good one for this. So if you're holding the stock, 50 DMA is important. If you're planning to buy, I think there's no proper entry point, but yes, about 21 DMA can be looked at if it fits your method. Otherwise, broadly, this correction is not that bad because the volume is a little on the lower side. Okay, I think we are done for the day. We have tried to take up most of the queries. I hope this session was helpful to you. And we are really sorry if some queries are missed because of the timing issues. So you can always email us. You can always write the query to us, email us. We will get back to you as soon as possible. We are mostly very active on that. And I hope this was some learning. You got some learning out of this session. So that's what our goal is always. Everyone in the session should learn something. This was live on YouTube. So who has that question about the session? Yes, Subi, this was telecast live on YouTube. So this will be available on YouTube always. Pawan Bhai will come on next Thursday. So yeah, alternate Thursday we do come. We are really sorry, Sapna. You can email us the query. We will answer it on priority. You just go to the YouTube MarketSmith India channel and you will find all our videos there. So that's it for the today's session, guys. Thank you for joining.